All right, welcome back to Build Up Trades, Sunday Prep. This is where I figure out what my game plan is going to be for the week. Of course, things can change every day and we have to pivot. But it's good to have a plan going into the week, the upcoming week. January 26th to the 30th, I'm looking at what we got going on for this whole week. Econ data and earnings is a big factor in how the market will react. So all I trade is SPX, so that's what my main focus is. So before we get started, as always, I am not a financial professional. These are my opinions, and this is for educational purposes. Only do your own research. Do not just take my word or my information or anybody else's. So let's get into it. And let's see what we got going on. Which I already did my plan. I'm just running through with y'all real quick, just to let y'all know what I got going on. So, if you thought last week was choppy, get ready for another roller coaster ride. We have Fed and the Mat 7 earnings in the same 48-hour window. So things are going to be pretty crazy. And be careful getting into it. We are trading a range between 6,800 and 7,000. Do not anticipate the break. Wait for the close. So I'm gonna go through econ data first, and then earnings, and then I'll go through the chart, go through my chart and my levels on SPX. So what we're looking at Wednesday at 2 p.m. is a no-fly zone, in my opinion. Do not hold zero-day options through the Fed announcement. You don't want to leave yourself exposed while decisions are being made by the Fed. So it could go up, it's too unpredictable. So that's my opinion. Stay out, just get out of your contracts. You can try to get trades in before the meeting, but I wouldn't hold anything to expiration. The market is expecting a pause. The surprise would be a hawkish tone on 2026 cuts. So on Wednesday, January 28th, FOMC meeting, 2 p.m. Eastern Standard Time, 11 a.m. Pacific Standard Time. So 2 p.m. for East Coast, 11 a.m. for West Coast, where I'm at. Expectations is rates to hold steady. That's the expectation. If Powell hints at fewer cuts in 2026 due to sticky inflation, the market will throw a tantrum. That's what we got. That's what I'm looking at as far as Wednesday. The next big day, in my opinion, is Friday, January 30th. PCE inflation, producer price index, impact, the Fed's favorite inflation gauge. If this comes in hot, the rally is dead. If cool, we target 7,000. That's in my whole opinion. All right, so that's what we got for econ. Let's look at earnings. Get my face out the way. Earnings, let's look at Tuesday. No, look at it. Microsoft is gonna be, I think it's gonna be Tuesday night, but they got it as Wednesday, but I think the earnings is gonna be released Tuesday night. I could be off, I don't know. But let's see, Tuesday night is the kickoff with Microsoft. If Microsoft misses, the whole SPX drags down. Microsoft is a big player in the S&P 500, is one of the big players. So it's gonna have it's gonna affect the S&P 500 a lot. Whether it's up or down, it's gonna make the market move. So my plan, I am flat going into Tuesday close. I will trade the reaction to earnings on Wednesday morning, not the earnings themselves. My earnings watch, this is the Super Bowl of earnings. So Tuesday, we're going Wednesday. We got Microsoft, metric, cloud growth. If AI CAPEX is high, but revenue growth slows, the whole AI trade dumps. So it's gonna be pretty nasty if revenue didn't grow or if it's going slow. Wednesday, January 28th, after close, we got Meta and Tesla. The risk, Tesla margins versus Meta's ad spend. So that's what we're looking at on the 28th. I'm gonna move on. It's chart time. Let me go, move my face out the way. Yeah. Let's look at 5. Am I on the 5-day? Yep, I'm on the 5-day. So, SPX technical levels, this is our battlefield. So I am watching 67.98 right here, just like a hawk. I'm watching that. That is our floor. That's our actual floor. But I set my support bold level at 6,800 because it's a round number basically. That's why I set it there. But I am watching 67.98. That is our floor. If we lose that, we are heading towards 6,700, in my opinion. Heading right down here. If we lose 67.98. Upside, it's capped at 69.83 until Powell speaks on Wednesday. So we're capped right here, 69.83. So until we see what Powell says, I'm looking at that mark too. So current status, SPX is coiling just below all-time highs, trapping both bulls who want 7,000 and bears who see exhaustion. So bulls, they want to head here. They want to head up here. The bears are going to try to wear out the bulls and try to take us down. My resistance is ceiling 69.83 to 7,000. The blue sky breakout zone. We need a daily close above 69.83 to trigger a run to 7,100. Watch for a pop and drop from at 7,000. If we hit 7,000, that psychological level often triggers profit taking. So if we hit 7,000, most likely there's going to be a lot of profit takers out there. My support, the floor, 67.98 to 6,800, right in here. The sand and the line in the sand. The line with the 50-day SMA and previous consolidation lows. So here's the yellow line is your 50, that's your 50-day. Orange line is your 200-day. The danger zone, a close below 67.70 here. A close below 67.70 and validates the bullish trend and targets 6,700 down here. The trap setup, watch for a Tuesday flush that holds 6,800. If we dip and reclaim 6,800 by close, that is the entry signal for the earnings run up. I'll be live in my Discord during the Fed announcement. Don't be a hero this week. Preserve your cash and have a safe trading week. And I'll see y'all next Sunday. Or I might try to do a trading review, a weekly trading review. I'm trying to get a schedule for that. But that's it. That's my Sunday plan. Head over to builduptrades.com and grab my course and get access to the Discord.